We often see these wild price swings in crypto, especially over a weekend, and just write it off as typical crypto craziness. But what if it's not just noise? What if it's actually a preview of how all our financial markets are going to behave in the future?
That's exactly the right way to think about it. Crypto is the canary in the coal mine for 24/7 global trading. These markets act as a release valve. When some big geopolitical event happens on a Friday night, the stock market is closed. But crypto isn't. It reacts instantly. We're getting a live fire drill in what a truly always on financial world looks like.
Right? So these exaggerated moves we see on a Sunday night when, let's be honest, not many people are trading, that's not necessarily because Bitcoin's fundamentals suddenly changed.
Not at all. It's a lesson in market structure. 24/7 trading doesn't repeal human nature. You get these periods of lower liquidity, like weekends or after hours, and any big move gets amplified. It's just a feature of the system, not a bug. It teaches us that in this new world, you have to understand when the market is deep and when it's thin.
So crypto is really acting as this early indicator for a global 24/7 trading future, showing us both the opportunities and the challenges. With that in mind, Mars, let's pivot to how this evolving market is being accessed by investors, specifically through the lens of ETFs.
This is where the story gets really interesting.
Following the successful launch of spot Bitcoin and Ethereum ETFs, the crypto ETF market is experiencing explosive growth. We're seeing major players like Wells Fargo and Merrill Lynch finally giving the green light. You guys at Bitwise even wrote a piece, ET Palooza, suggesting we could see ETFs for a dozen assets in months and maybe 25 within half a year.
It's happening, and the numbers are staggering. Look, institutional and professional investors control about $100 trillion in assets globally.
That's a number so big it's hard to even process.
Right. But think about it this way. If just a tiny fraction, say 5% of that capital eventually finds its way into crypto, that's a $5 trillion inflow. That's more than the entire crypto market is worth today. The ETF approvals are critical because they're the familiar, regulated gateway for that capital to finally enter the space.
That massive influx of capital is certainly a compelling prospect. Now, speaking of specific assets gaining significant traction, you've written about Solana season. What's driving this surge, and what does it mean for Solana's future?
It's basically a perfect storm hitting all at once.
Solana is setting up for an exceptional fourth quarter driven by three converging factors. You have the expectation of numerous Solana ETFs bringing in new money. Then you have these major digital asset treasury companies run by crypto OGs creating Solana-specific investment funds. And on top of that, there's a huge boom in stablecoins and tokenization, and Solana is a key beneficiary.
Exactly. This multi-pronged demand from ETFs, dedicated treasury funds, and real ecosystem usage creates a powerful catalyst. It's one of the best setups for an asset I've seen in years.
So when you talk about Solana season, what's the real takeaway for an investor watching this unfold? Is this a sustainable trend or just a short-term surge?
That's the key question. I think the season refers to the surge in price and attention, which might be temporary, but the underlying drivers are not. The growth of stablecoins and tokenization on Solana is real, durable utility. It proves the model. And that success doesn't just help Solana, it validates the entire thesis for other high-performance blockchains. It shows what's possible when the technology matures.
It sounds like Solana is really hitting a sweet spot with these converging trends. Now, let's shift gears to a different kind of asset class that's also seeing renewed interest, hard assets like gold and silver, and how Bitcoin compares.
This is a trend driven by a very simple, very powerful fear.
Amid concerns of fiat currency debasement, hard assets are attracting a lot of attention. You've argued that Bitcoin will ultimately surpass gold because it has, well, infinite storage capacity and can be moved instantly. This seems to go beyond gold's old advantages of being dense and easy to carry.
It's a fundamental upgrade. The rising tide for all hard assets, gold, silver, Bitcoin, is a clear signal that investors are losing faith in government-issued currencies. They're looking for an escape hatch. And when you compare the escape hatches Bitcoin is just better money. Gold beat silver because it was more dense. You could store more value in a smaller space. Bitcoin takes that to its logical conclusion. You can store infinite wealth in no space and move it at the speed of light. It's the ultimate evolution of a hard asset.
That search for alternatives is definitely driving innovation. Speaking of innovation, you've also been looking at the Web3 ETF and companies like Roblox. What's the outlook there?
I think we're seeing the very early days of the next version of the internet taking shape.
The Bitwise Web3 ETF holds companies like Roblox, which seems to suggest a bet on Web3 features becoming mainstream. And now you have people like Kevin O'Leary launching indexes for tokenized collectibles. It points to a future where real-world things are traded on-chain.
Absolutely. The convergence of gaming, Web3, and tokenization is the next frontier. A company like Roblox gets it. They understand digital ownership is crucial. The same way Netflix figured out a new way to monetize the internet, companies in this space will figure out how to monetize Web3. And it's not just digital items. The idea of tokenizing real-world assets, or RWAs, whether it's a collectible watch or a piece of real estate, is going to be massive.
It's clear that the future of finance and digital ownership is rapidly evolving, with crypto and Web3 leading the charge. Mars, it's been an absolute pleasure having you on the show today. Thank you for sharing your incredible insights.
Thanks for having me. To sum it all up, I think there are a few key things to watch. First, crypto is giving us a real-time preview of the 24/7 global trading future, volatility and all. Second, the ETF boom is just getting started and is the pipeline for trillions in new capital. Within that, assets like Solana are firing on all cylinders with ETFs, institutional interest, and real-world use. But zooming out, the big story is the flight to hard assets, where Bitcoin's unique properties position it as the ultimate store of value. And finally, all of this is building toward a future of tokenized real-world assets and Web3, which will fundamentally change how we think about ownership. It's an exciting time.